When we started working with teams really early on, we prioritized DeFi, we prioritized making sure that liquidity would be flowing in the network. We got decentralized exchanges to be supportive of the network. Like every major exchange, you can on-ramp directly into Arbitrum, whether it's Coinbase, Binance, really anything. You can on-ramp for sure ETH and stables, and we're also getting other tokens within the ecosystem added, right? So the goal is how do we turn Ethereum mainnet not as something that's like a bridge to Arbitrum, but really as a settlement layer, and have the user experience flow directly to Arbitrum, right? So our vision is to continue to bring people into this ecosystem, have liquidity flowing through it, where, Ethereum in many ways is an L1 is hot lava. It's expensive to use. You don't want to be using it. And the mental model is the same way that you probably haven't sent a wire since you bought your house when you had to send a wire. We don't want to be touching L1. Have confidence L2, have assets living on L2. So I feel a lot of it is that.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show is a comprehensive overview of why Arbitrum remains the most used Layer 2 on Ethereum. In this episode, we speak with AJ Warner about Arbitrum innovations such as Stylus and BOLD, the DAO's recent vote to launch the Gaming Catalyst program to invest $215 million in Web3 games, as well as ongoing DAO discussions over treasury diversification and ARB staking. But before we do, just a quick word from our sponsors who make the Edge podcast possible. Introducing Flat Money, the first decentralized delta-neutral flat coin built on Base with sustainable yield that's completely untethered from legacy finance. Because DeFi needs an uncensorable based unit of currency. You can mint unit with RETH, which is held in the protocol's shared liquidity pool, where it's borrowed by leveraged traders. As a leveraged trader, you can deposit your margin collateral and go long on RETH. If you're trading in the perpetual futures market, you'll pay unit holders to open leverage positions. If you're holding unit, you'll earn yield from liquidations, borrow rate, and trading fees. Preserve your purchasing power and offset your exposure to crypto market volatility. Learn more at flat.money. Power up your portfolio by borrowing, lending, and multiplying your favorite assets, made safe and easy by the industry-leading automation tools at SUMMER.FI. SUMMER.FI offers a curated DeFi experience to access the highest quality protocols and strategies. Discover new earn strategies for your portfolio in a user-friendly app designed to filter based on the tokens you hold, the networks you transact on, the protocols you trust, and the highest available yields. Learn more today at SUMMER.FI, the best place to borrow and earn in DeFi. Tired of hopping between tabs, searching for new tokens before the hype catches on? Try MATCHA.XYZ, the DEX aggregator from 0x. Matcha connects hundreds of DEXs so you can trade millions of tokens and find fresh new drops. Matcha works out the best route to save you money on every trade. Swaps are free and Matcha has everything you need to trade on-chain. Gasless swaps, limit orders, and cross-chain, all in one place. Search Trade Done at MATCHA.XYZ. Catch the tide of the mainnet launch of Puffer Finance. Whether you're an Ethereum staker or an aspiring node operator, Puffer delivers the decentralization revolution with its cutting-edge technology. Start with just 2 ETH to unlock the potential of native liquid restaking and maximize your earnings. Join the movement now and anchor your stake at puffer.fi. All right, let's introduce AJ Warner, the Chief Strategy Officer at Offchain Labs. AJ, welcome to the Edge Podcast. How are you doing?
I'm great. Thanks so much for having me on, guys. I'm really excited to chat with you.
This podcast should serve as a nice update for folks on the Arbitrum ecosystem. I can attest that among all the L2s, I personally have the most amount of my own liquidity deployed on Arbitrum. I've been thinking about why that is, and I think it's a testament to just how long-standing Arbitrum has been live. It's a testament to the fact that there's so many applications. When I think about my favorite DeFi apps like Pendle, there's a lot of liquidity, there's a lot of activity that lives on Arbitrum. And so it's become an extension of Ethereum mainnet for my own portfolio. The numbers reflect that as well. So if you look at the total amount of value that is deposited on chain, I think as of this recording, it's around 17 billion US dollars. on Arbitrum, which I believe ranks it as number one among all L2s. And so we're going to try to break down, like, why is that? What's happening? What sort of like new tech is coming to market soon? And what else can we look forward to as users? So AJ, do you want to kick off with just a little bit about your background for folks that don't know you, and would love to then launch into like working at Offchain Labs and, you know, tell us everything about the team that is so important and key to Arbitrum.
Sure. Yeah. So I'll tell you a little bit about myself, a little bit about the Offchain Labs team. You know, we're obviously core contributors to the Arbitrum protocol, the initial developers of the software. The public Arbitrum chains obviously are controlled by the Arbitrum DAO. I'm sure we're going to talk about that a fair bit through this as well, which is, I think, a unique and super exciting component of what's happening with Arbitrum. But personally, so AJ, obviously, I've been doing this for about 4 years now at this point. I joined the Offchain Labs team full-time when we were on the alpha testnet. So this is 2020, very early days. People didn't even know what we were building, barely heard about us. Before that, so I was a real estate lawyer in New York. I was working on real estate development throughout Manhattan, a very, very far cry from my day-to-day activities since, but I've been in the crypto space since about 2014. I got really passionate when Ross Ulbricht was arrested and the Silk Road thing happened. Bitcoin for me was really two things. I would say an amazing, unique opportunity that I thought like it just returned sovereignty to the individual, something I care a lot about on a personal and philosophical level. But the second that I think, you know, is something that's playing out now, it's actually with meme coins a little bit, was in terms of like an opportunity as a student, it was the only thing that I thought I could invest in that I'm like, oh, if this does well, look at 100x. And I think that that's like a very much lost thing in terms of how like ICO bubble happened, and now we're in like sort of a more like venture capital backed environment where I think the average person engaging in crypto has really, you know, been embracing meme coins. So anyway, getting a little off topic, but that, you know, I've been working at Offchain Labs, I'm Chief Strategy Officer, so I've been leading the partnership business development efforts around the Arbitrum ecosystem for about 4 years, as well as a lot of just different initiatives that we do at Offchain. You know, one exciting example of that is when we acquired Prism, the leading staking client for Ethereum, and that team sort of joined the Offchain Labs family. That was something that I was very focused on. So I, you know, do a little bit outside of the Offchain Labs, outside of the Arbitrum ecosystem as well in terms of corporate development and company strategy. But I spend most of my time building with Arbitrum builders. So it's an amazing journey. You know, Arbitrum technology started. It's actually, you know, for those that aren't familiar with the story, it's been live about 3 years in production, but Arbitrum actually has its roots before Ethereum even existed. So Ed, who's one of our co-founders and the chief scientist at Offchain Labs, when he was at Princeton, the first smart contract white paper came out, said there's no way this stuff scales and remains decentralized without what we now call layer 2 technologies. And he developed the first version, the alpha version of the Arbitrum fraud prover with his class in Princeton in 2014. He went to the White House. He was Obama's deputy CTO. When he came back from the White House, it was 2018, January 2018. And Stephen and Harry, the other two co-founders, came into his office and said, you ever heard of this CryptoKitties? They're congesting Ethereum. I think that this thing you built 4 years ago with your team actually has some viability. So 2018, the three of them picked it up. They started working on it. Eventually all left Princeton. Ed, you know, gave up his tenure and joined full-time as a startup. And that's really where Arbitrum got off the ground. It's been an incredible journey to be a part of.
AJ, what would you attribute to the greater success of Arbitrum? I think no matter what metric you choose, Arbitrum stands out from the pack. Again, I use total value deposited on chain, which I believe the second closest chain would be Base, around like 7 billion. And I want to call out the fact that the airdrop for Arbitrum was something like 2 years ago. So like, I mean, we're far past that, and you guys have continued to see growth. So everyone looks to the airdrops for a certain amount of growth, but Arbitrum just continues to, grow. So anyways, what do you attribute to it?
So I think there's a couple of things. I think that, first of all, being early to market, I think, was very important, right? You can look at this also with like the Polygon POS success that we saw, in 2021. When Arbitrum launched in 2021, it was a time when like Ethereum was desperate for scaling. Like you probably remember like $50, $100 transactions being a normal thing at the time. Anybody who's joined the space in the last couple of years would think it's insane. And it was really only 2 or 3 years ago that was like industry standard. So I think that was important. But the thing that I would say differentiates Arbitrum from, a lot of competitors are really two things. One is the tech stack. The tech stack is, like you said, it's been pretty battle tested, obviously, in terms of time. And God forbid there should be, any hack. Nobody would ever want that. But on any of our competitors or on Arbitrum, obviously. But people have confidence in the system. They have confidence in the people that are building the software. It's to the test of time. And it also made some really critical design decisions early on that are really optimized, particularly for financial activity. So I'll talk about a couple of those. And one is, sometimes these things happen and you don't realize how important they are at the time, and then they turn out to be these like massive differentiators. But one is block times. So Arbitrum, for those who are unfamiliar, when it accepts a transaction from a user, the sequencer guarantees its inclusion within 250 milliseconds. That's unique to Arbitrum. Solana is, in terms of just general blockchain architecture, the closest, which is around 400 milliseconds per block, but you don't necessarily get into the next block. So that's like a little bit of a differentiator. And then in terms of L2s, there's no other L2s that are doing blocks faster than 2 seconds. And this is a huge differentiator for things like, how much MEV is going to be leaked if you're talking about DEX trading, Oracle updates if you're talking about like high leverage trades on something like GMX or Vertex or and other DEX, right? So all of these small decisions like block times really enabled like best-in-class on-chain decentralized DeFi applications to take full power of what they want to do and have all their dependencies work as efficiently as possible. And we've actually seen that to be a huge differentiator. If you look at all of the purpose environments, like the teams that have been building for a really long time, Synthetics actually recently announced that they're moving and joining the Arbitrum ecosystem, but GMX, Vertex, a lot of these teams, Gains Network migrated from Polygon, are really finding really strong product market fit in these categories because of some of those design decisions. That begets a lot of liquidity, that brings liquidity. If you look at sort of ETH USDC trading pairs, Arbitrum pales, every other chain, obviously outside of Ethereum mainnet, primarily because people have confidence that they're going to have the least slippage, the least loss to, MEV bots, etc., using Arbitrum. And we've been very focused on the importance of that because, again, there's a lot of speculation. I think crypto and blockchains have inherent speculation as part of what it offers. But you want to have those blue chips. You want to have the infrastructure that can actually bring people on chain and be the back-end architecture that can support these use cases. So I think a lot of it is that. It also comes down to strategy. When we started working with teams really early on, we prioritized DeFi. We prioritized making sure that liquidity would be flowing in the network. We got decentralized exchanges to be supportive of the network. Like every major exchange, you can on-ramp directly into Arbitrum. So there's Coinbase, Binance, really anything. You can on-ramp for sure ETH and stables, and we're also getting other tokens within the ecosystem added, right? So the goal is how do we turn Ethereum mainnet not as something that's like a bridge to Arbitrum, but really as a settlement layer, and have the user experience flow directly to Arbitrum, right? So we've been partnering with the Robinhood wallet. You've probably seen that in the last couple of months where Robinhood is going to be on-ramping through their wallet product. More users on chain, and we've been working really closely with them. So our vision is to continue to bring people into this ecosystem, have liquidity flowing through it where, Ethereum in many ways is an L1 is hot lava. It's expensive to use. You don't want to be using it. And the mental model is the same way that you probably haven't sent a wire since you bought your house when you had to send a wire. We don't want to be touching L1. Have confidence L2, have assets living on L2. So I think a lot of it is that. Since then, the strategy has expanded. So Arbitrum originally, and still maintains its lead as like a DeFi hub. But another vertical where this like block time, for example, has proven to be critical is gaming. And particularly heavy on-chain gaming, right? So the early iterations of GameFi was like, staking, buying NFTs, staking NFTs, stake tokens. And it wasn't really focused on gameplay or like user experience. But what's happening in the gaming space is now we're much more focused on how do we make these games fun and have on-chain Web3 properties, right? Buy, sell NFTs. Some teams like Proof of Play are having like gaming logic living on-chain, etc. If you want to have a major on-chain interactions, you need to be able to replicate that Web2 experience, right? So things like 250 millisecond response times become critical, especially if there's like 10 actions, right? Because then the user flow is, 2 seconds versus 15 seconds or something like that. And we've seen particularly with like the Arbitrum Orbits, which is like the Arbitrum, app chain deployments, that a lot of the major gaming chains are really excited about using the Arbitrum tech stack. So just to name a couple, Zai, Treasure Chain, Proof of Play, Anime Chain, Ape Chain. We're really seeing this coalescence around using Arbitrum because it's just the best product for what they want to build and the end use that they're trying to reach, which is basically mass adoption and sort of breaking out of those traditional crypto native environments. Those Orbit chains are all, for the most part, L3s that are settling to Arbitrum 1. And a lot of them have the liquidity live on Arbitrum 1. So, for example, Zai's token, there is liquidity on Zai, but the core trading of that token is on the L2, right? So we're having a reinforcement of Arbitrum 1 as this liquidity hub because it has such strong liquidity properties and ecosystem. Like you were saying earlier, like you keep your liquidity there. You might not bridge into Zai, even if it's the same tech stack right away, because it's just an extra friction step. So that's kind of been this like reinforcement. And that's why we're seeing all of this growth continue to compound, because we have people buying into this vision of using the technology and really just, scaling the business the way it works well for them.
That's awesome, AJ. I think you kind of like laid this out in a tweet that I saw a few days ago, where you kind of went over the tech, the ecosystem, and then what's happening in the DAO space for Arbitrum. I kind of want to like attack those things maybe like one by one and break them down individually. You already kind of gone over some of the big tech stuff and some of the other gaming stuff that I want to get into a bit more, as well as the Robinhood thing. I think we should probably, dive into that a bit more at length as well. But kind of starting with the tech, something that's been on my radar for a while, and I'm not sure how much people know about it or understand what it is, but Stylus. Could you maybe give us what is Stylus and like why is it important?
Yeah. I'm extremely excited about Stylus. I think that Stylus is one of those things, we get caught up in like daily or weekly narratives, but Stylus is one of those things which is frankly going to change blockchain development, I think, over a multi-year horizon. We've been excited about it. Again, going back to 2020 when we raised our Series A, we had the early underpinnings of Stylus already included in that deck. Like our vision was really to do it. So now before, I haven't talked about what it is, but so what is it? Basically right now, if you want to build in blockchain architecture, you have to choose between the EVM, and that's like Ethereum, most L2s, Avalanche, other sidechain or L1 architectures. Rust in Solana, for example, or now like Aptos and Sui, you're seeing they're using Move. One exception to this, I think, is like Starkware, which obviously has the Cairo programming language. But you have to make these choices. The difference between that and that's, to be clear, today what Arbitrum is. Arbitrum is an EVM-compatible L2, and that's why everything works right out of the box. Our view of what the EVM is that it should be the floor and not the ceiling. And what we want to do is improve on the EVM, and Stylus is what enables that. So Stylus enables you to program in other languages side by side with the EVM on the same blockchain, right? So some people might have like, okay, we can have, an SVM that settles to Ethereum or an EVM that settles to Solana, but those are like different blockchain architectures, right? This is, I want to write 60% of my contracts in Rust, 30% of my contracts in Solidity, and 10% of my contracts in C. You can do all of that on Arbitrum chains, and they can simultaneously interact with each other. And that is completely unique in terms of what exists on the market today. So right now, for example, and I'll get into why this is important, you're seeing teams make decisions that are inefficient from an engineering perspective because they need to use the EVM or Solidity. But if there are certain components that if they were not written in Solidity, they were written in Rust, or if they were just wanted to import a library, a C library, for example, or a C++ library, their whole architecture and ability to launch things is going to be totally different. So, one early example of this is the Renegade team. They're building like a ZK AMM essentially, which is like dark pools basically, and a lot of their components are written in. They're using Stylus for their contracts. A lot of their components are written in other programming languages like Rust. And the reason for that is the advanced cryptography is impossible to do in Solidity. So they're seeing like 100x improvements using this versus using the EVM. And it would be literally impossible for them to run on a public chain without Stylus. So is that so different? Like the AMM architecture exists today, but this is like the next iteration. It's a much more powerful version that introduces features that are impossible to exist. And that's why we're really excited. What we've seen, like obviously, Solana's done a great job building out an ecosystem where I think we've seen failures in, programming languages that didn't embrace the EVM is because you had to choose something else. This is letting you build whatever you want with the tools that you need. The only requirement now is it either needs to be the EVM or has to compile to WASM. And, most languages do, like Rust, C, C++. I would love to see Move. I would love to see Cairo. Like all of these things are possible, and to be fully interoperable with the EVM is incredibly powerful.
So just to like break it down even further, and maybe throw another example at you. Would this allow, say, an app that's already deployed on Solana in Rust? Would it make it just easier to redeploy then using Stylus?
Way easier. So Solana Rust and traditional Rust have like some small differences, so they're not exactly the same. But historically, when you've had teams that wanted to migrate from the Solana or expand from the Solana ecosystem into other, they had to rewrite in Solidity. This is saying that you can write in Rust. You might have to make some small changes, and like our team is probably going to look into like how we can make that as efficient as possible. But you don't have to change the programming language that you're writing it. So you can take advantage of composing with Uniswap, which I don't expect them on day one to switch into like a Stylus-like environment. Like they're obviously cross-chain, very focused on Solidity. But if you want to write a Rust-based or, move over from Solana, interact with Uniswap or interact with Aave or anything else that's written in the EVM or Solidity, you can without sort of any compromise.
AJ, I want to talk about another like tech innovation that we've seen, coming from Offchain Labs or Arbitrum, which is referred to as BOLD. And so I'm wondering if you can also just define like what is it? There's a reference here to permissionless validation for Arbitrum chains. Maybe a good way to help define it for our listeners is to basically like paint a picture of what the world will look like once this is working versus like the problems that exist today.
Yeah, definitely. So there's a couple of things that BOLD is going to unlock that are, I think, very cool for different use cases. So the world where it is today is you could launch an Arbitrum rollup chain with permissionless validation, theoretically. We do not recommend it in rollup mode, meaning like an Arbitrum chain. For the reason is there's a specific edge case where somebody who doesn't mind burning a lot of money can burn money and delay withdrawals through the optimistic rollup system. So what BOLD is intended to do is to cap the amount of time that even a malicious actor would have the ability to delay withdrawals from the protocol, right? So that's like the big problem that we're trying to solve. And with BOLD, we are recommending for Arbitrum chains, whether it's adopted on the public chains is going to be up to the DAO, but let's just talk about the technology stack for a second, that you can have permissionless validation. And the reason this is important is because one of the properties of rollups is that you want to be able to get your assets out and trust nobody but yourself, right? And theoretically, if nobody else wanted to challenge, you should have the ability to challenge. On the current public Arbitrum chain, Arbitrum 1, there's, I think it's something in the area of like 15 validators that are major organizations, a lot of the exchanges, the Ethereum Foundation, obviously Offchain Labs, etc. And those are the entities that can submit challenges if somebody was committing an invalid state root. The DAO at any time could change it to be, permissionless validation, but fundamentally that's where the system is today. And I actually have a funny story I'll tell you at the end. So BOLD is going to, though, get rid of all of this and make it permissionless. And the reason that's important is because then, DeFi dad, if you have your money and the whole world is ignoring this invalid state root and you want to challenge, you can get your money out and trusting nobody but yourself. That's a major important property. Obviously, there's a lot of complications. You want to make sure that, and this is why battle testing is so important. You want to make sure that nobody, that's actually the case. There's no software bugs associated with it, right? But, assuming that is the case, that is the end state for where we want to be. And BOLD is going to unlock that. The second thing BOLD is going to unlock, and this is probably we haven't spoken about enough, is going to be fast withdrawals for chains that are running in any trust mode. So any trust mode you might be familiar with, I can just give a bit of an introduction, is like Arbitrum Nova, for example. And a lot of the Orbit chains use any trust, where there's the committee that holds the data. There's a permission set of validators that are the ones that are maintaining the validation of that network. Right now in the current system, you have a 7-day withdrawal period from those L3s, for example, to the L2, or from Arbitrum Nova to L1. With BOLD, the system, with the upgrade of BOLD, one of the features that we've introduced is once all those validators have signed off on withdrawals, you don't have to wait actually 7 days. Your assets can go back to the parent chain within like 10 minutes. And that's going to be a huge UX improvement for like these L2, L3 interactions, which, 7 days is just like a prohibitively long amount of time for like why you want to do something on an L3. So those are both really exciting things within the Arbitrum ecosystem, and part of our, commitment to continue to decentralize these technologies and just continue to make sure from a product perspective they're good. One cool thing, and this is the story that I wanted to say, is the way we've designed our system is that yes, you have to trust one of these permissioned actors, but if nobody does any actions and there's no sequencing or validation for like 7 days, it actually becomes permissionless today. But in reality, like we always have somebody validating the networks because there's so many different people that could be doing it. Where did this come up though? So when ETH forked and when we had the proof of stake, like the merge, you guys probably remember like ETH POW, like people were talking about like, how are we going to make ETH POW valuable, right? So when ETH forked, basically, Arbitrum existed on both chains, the ETH POW chain and the network, the POS network that everyone uses today. But what happened was, so there was like 1 million ETH POW in the Arbitrum bridge on like the fork that nobody cared about, but it was trading at like $6 a token. So somebody tried like submitting an invalid state root to steal like 1 million ETH POW tokens, like $6 million worth of ETH POW out of the Arbitrum bridge. Somebody in our team had like a suspicion that this might happen, but because validation became permissionless because there was nobody actively validating, like one of our colleagues in his like personal capacity was able to actually defend the ETH POW network. So like, again, like you have these like fallbacks in these systems to make sure that people can get their funds out, that they remain secure, decentralized. But that was like a funny example of like, we know the system works because we've seen it like when someone tried to steal on ETH POW, which was fun to see.
AJ, just calling back to that tweet that we're referencing some of these questions from, you also have one that was just basically like redacted. I don't know if there's anything you can share, even if it's just like a quick tease here, but yeah, what is redacted?
Yeah, that was me being cute about something we're going to be talking about, which is like time boost. So Offchain Labs has been working on this proposal of a new software update for time boost. So what is time boost fundamentally? Right now, the way the sequencer on Arbitrum and other chains, it takes transactions as first come, first serve. And what you're basically seeing is a lot of like either the MEV bots or people who want to get transactions in, they're spending a lot of money on latency wars, essentially trying to co-locate with the Arbitrum sequencer to get their transactions accepted first. This is in many ways extremely inefficient, obviously, and none of the value is captured by the protocol. It's externally captured by like, cloud providers essentially. So what Time Boost is a proposal to essentially, the proposal will come out soon, so you'll see more details publicly, to have for Arbitrum chains a mechanism where you can essentially sell a fast lane. which is I want to be able to have my transaction in first for like a bounded period of time. It doesn't mean that I get to front run other people's transactions. Everybody else's transactions still remain like in a private mempool, but it allows me without latency to basically pay for the right to back run a transaction that's already been posted on chain. And the proposal is going to have like an auction mechanism essentially for having people who want to capture this be able to pay the Arbitrum chain operator or the DAO in public Arbitrum instance, or whoever's running the Orbit chain in a private instance, the ability to do that. What we like about this system is it doesn't introduce front running because you don't get to see somebody else's transaction to front run them. It allows the chain operators to internalize the value that's created by opportunities happening on the network. And it also doesn't really increase latency so much for the average user because they still have a guarantee that their transactions will be included within a specific amount of time. So curious to see and excited to see what the community is going to think about this, but we're pretty excited to sort of release the vision for it.
Before we get back to the show, just a quick thanks to our sponsor at Mantle Network, the layer 2 that pioneered the 5th largest LST with 1.6 billion TVL called MATCH. Since July 1st, Mantle is running a 100-day airdrop campaign called Metamorphosis to distribute a new governance token for the Mantle liquid staking protocol called Cook. The community can earn points for Cook called Powder by holding METH in Metamorphosis and simultaneously enjoying other yield and reward opportunities in the Mantle ecosystem. Users can also earn Powder by staking MNT in the Mantle Rewards Station. For more details, go to the Mantle blog at mantle.xyz/blog and follow the 0xmantle handle on Twitter for more updates. AJ, something else you referenced earlier are orbit chains. Could you define what is an orbit chain? Also would love to touch on what orbit chains have launched, how are these connected? How does liquidity flow? So yeah, just give us a general overview.
So one thing that sort of changed, I would say, in the last 15 months is people want their own chain. I would say that this probably started when Base launched, right? Until that point, it was the teams that are developing the software are launching their own chains, subnets and supernets like Polygon and Avalanche were building was kind of a thing people talked about, but never really took off. And then, Base launched an OP stack chain, and that was kicked off this new world of people wanting chains. And I think they're interesting. I think that it depends on the use case about whether you should be on a public chain versus your own chain. I think in the gaming context, for example, it certainly makes sense to be on your own chain or your own environment. So orbit chains are just the ability to take the Arbitrum stack and launch your own network. So one of the questions that comes out of this is, how do we have alignment with the orbit chains? And how do we structure interactions between Arbitrum 1, the public chains, and orbit chains, etc.? So we have a little bit of a hybrid approach that we've been working with, which I think is pretty differentiated from some of our competitors. So Arbitrum, just for some background context, the Arbitrum technology stack is under a community source license, and that's part of what generates the vision for how orbits work. And the real fundamental thing that we're trying to solve for is alignment, right? So how does this chain that's using your technology stack remain aligned instead of becoming a competitor in some sense, right? So the way it works is if you launch an L3 on top of Arbitrum 1, which basically means you launch a rollup on top of Arbitrum so that you settle to Arbitrum. It's permissionless. You don't have to talk to anyone and you don't have to pay anyone. You can just launch one. You can do it in seconds with a rollup as a service provider. You can do it yourself. You can do whatever you want. And the reason why that there is natural alignment there is, your assets are bridged through Arbitrum, your transactions are settling to Arbitrum. So we're going to give you this environment to experiment with natural alignment to Arbitrum. But there's a lot of chains that want to either launch an L2 or they want to launch an L3 on top of a different L2. And how do we maintain alignment with them? They can be part of the Arbitrum family, take advantage of growth programs, etc. And the mechanism there is basically they contribute 10% of their chain profit to the Arbitrum DAO as part of this expansion program. So L3, permissionless and free. L2 or L3 on a different L2, you have to contribute back. There's been about 80 Orbit chains that are in the development cycle, probably about 20 that have launched at this point. The most famous and popular ones are probably, Zai was the first one that launched, which is a gaming chain. You have Anime, which is the Azuki chain, Ape chain, which is the ApeCoin DAO, Kinto, which is building a KYC-focused L2. Then you have Treasure DAO is building their own universe of chains. Those are going to be L2s as well. Degen chain, which settles to base, you might be familiar with sort of the Farcaster tipping. They're actually using Arbitrum as an L3 settling to base because, again, it's logical for them. And the vision that we have is that there's really two dimensions of where Arbitrum is competing. You have the public Arbitrum chains, which we want to have be best in class, most liquidity, etc. But then we also want to see the technology just proliferate everywhere. Anybody wants to build their own blockchain, they should be using the Arbitrum tech stack. And we should figure out ways to remain aligned. So that's been sort of where we're at. You might be, DeFi data, I know you're on the DeFi side, you might be familiar with Rhea. So Rhea built an Arbitrum chain. They're actually doing something super unique, which is instead of 250 millisecond block times, they've moved their block times to 100 milliseconds. Again, nothing is close to as fast as that. Arbitrum uniquely enables that. And it's really cool to see sort of their ability to take and make the Arbitrum tech stack flexible to support that. Raribles built an Arbitrum chain. They've done unique stuff by having creator royalties enforced in the protocol. So again, we have all these teams that are modifying the code base, trying out, experimenting in these environments that they have, and it's been great to see.
Yeah, that's such a great example with Rhea. We just did a podcast with them, and I mean, what they offer, for traders, it's a standout. They really are. They are offering better trading conditions on chain, and I think that's what's going to onboard folks who might have traditionally used a centralized exchange, but now are seeing a user experience that is equivalent to what they enjoyed on a centralized exchange, plus all the benefits of trading, as a DEX. Are there any other examples of that, AJ, in terms of projects that are either building on Arbitrum or building their own Orbit chain where new or interesting use cases are unlocked? I'm specifically thinking DeFi. I'm also thinking about RWAs. I feel like RWAs is it's a very hyped sector of DeFi that hasn't been able to deliver as much value quite yet. I think it's coming. There's so much value in the real world that needs to come on chain. So I don't know if there's any examples of projects you're excited for, like Rhea.
Yeah, so this might not directly answer the question, but it actually goes into some of the DAO stuff that I think is super interesting. Is the DAO just had this treasury expansion program that they did in the RWA space, where basically the Arbitrum DAO is going to be buying something in the area of $35 million worth of treasury assets, T-bill assets. And you had all these major organizations, apply to the Arbitrum DAO to have the DAO purchase these assets and get involved in the Arbitrum ecosystem. So I think they released their announcement of who they selected, and it's some of really cool names like Securitize and BlackRock's product, Ondo, Open Eden, Superstate, which is Rob Leschner's project as well. So it's really cool to see some of the innovation that's happening within the DAO as they try and support new verticals. We've seen people doing interesting things bringing real estate on chain. There's a team called Estate Protocol doing that in Arbitrum. Ostim is trying to bring commodities. You've got a lot of teams that are doing a lot of different things. And there's a couple more that I'm excited about that are still in stealth. But my take on the RWA space is you got to break it down kind of into two things. One is the T-bill space. I think it's early, but exciting in the sense that if you look at the current environment of people that exist on chain, the overlap of people that want to hold treasury bills and also want to interact with blockchains is very low. I think that's why we haven't seen this adoption, right? Because it goes back to what I was saying with meme coins, right? Like you're not going to hold a 5%, yielding asset when you're trying to get 100x, on a Solana shitcoin, right? It's just a different environment. But these institutions have the ability to bring people on chain. And the reason they want to do that is because of operational efficiencies. It actually has nothing to do with meme coins or 100x opportunities. It's just a much better system for them to be able to sell treasury yield to people and distribute the assets and the dividends, etc. Right? And we need to be embracing that and also supporting that as an industry, because these worlds will meet and collide at some point when just people come on chain. And that's one of the things that I'm excited about. So like that treasury bill vertical sort of, I think, is just going to take time until you have traditional people more comfortable holding these sort of, assets that exist once they understand the value prop and the benefits of it. And the second is some of the, experimentation around, equities on chain, commodities on chain, even more stablecoin experimentation or decentralized stablecoin. So those, I would say, are going to be more crypto native people trying to just exist. And, if you can trade equities, like that's super cool. And if you can do it in a regulatory compliant way, even cooler, right? So I think those are like two different things that we're kind of like lumping in with the term RWA, but they will converge, and it's really important, I think, to be supporting the use case. We've seen, in terms of just DeFi opportunities at Arbitrum, we've seen like a lot of like liquidity staking. We're talking about Pendle, but like if you look at like Renzo and many of the other different teams that are building in that space, like doing really amazing volumes on Arbitrum. And yeah, it's just it's exciting to see like the Arbitrum DeFi ecosystem. Started, I would say, as like the home of perps and is just continuing to move to maintain its like culture of innovation, building alongside builders and liquidity that, has been there for like years at this point.
AJ, I also want to talk a bit about gaming here. It kind of relates back to DAOs as well. We recently saw this like gaming catalyst program, this GCP proposal be passed, I believe. And I mean, it signals to me that like Arbitrum's pretty serious about gaming. So we'd just like love to get your take on how you're seeing gaming, like Web3 gaming, and yeah, just any thoughts and input on it.
Yeah. So the GCP is another really interesting example of like where the Arbitrum DAO, I think, differentiates from most of its competitors. Most sort of blockchain environments, like the foundation is a pool of capital where they have grants and they do that, right? With Arbitrum, the Arbitrum Foundation has, some capital that it can be deploying, but the overwhelming majority of the treasury actually sits on-chain controlled by the token holders. Something like 3.5 billion tokens that the token holders control, sitting on-chain, and they can do with it what they want for growth. So the GCP is actually an initiative that was born out of that, right? And again, this is not an Offchain Labs initiative. It's not a foundation initiative. I think this is really cool. And it's probably another podcast to discuss why, DAO control of assets and DAO control of smart contracts, I think, is so important. But what the GCP is fundamentally intended to solve is basically in a world of gaming, right? And let's just talk about the gaming value proposition for a second. I think that people conflate sort of the lack of success in games historically with like what that means for the future in crypto. If you look at just like a natural use case, like gaming is an incredibly obvious vertical for what crypto can solve, right? You put all this time, effort, and frequently money into the performing well in a game, and then there's nothing you can get at the end because you don't have actual control and sovereignty over these assets. In a blockchain-based environment, you can then sell it or trade it or kind of do whatever you want with it. And you can also build on an on-chain profile of what does it mean, like, from an advertising perspective, from a growth perspective, be able to be targeted as a gamer. So gaming to me is like a very obvious sector and where which blockchain's technology can play a huge role. Structurally, if you think about what's happening with these games, the ones that are looking especially to onboard millions of users, they need their own environments, right? So, if you, for example, like give a grant to like a DeFi project to launch on your network, they're attracting liquidity to your network, there's transactions on your network, you can sort of take KPIs and track what the value is, and it can line up with like, let's say, a growth-based grant. gaming is a little different because these chains they don't really care about like sequencer revenue, for example. They care about game revenue. They frequently have their own blockchain environments. They don't go on public chains. So the question is like, how do you sustainably fund these out of like a pool of capital that belongs to like the Arbitrum DAO? And what the GCP is intended to solve is to basically act as leverage for gaming publishers and developers and studios to build the way they want to build within the Arbitrum ecosystem, structure deals with the Arbitrum DAO that make sense, and then actually have capital available to do that, right? So it doesn't have to be, I'll give you, $100,000 in order to be able to access your game, because $100,000 might be insufficient for the game, and the return might be insufficient for for anything beyond $100,000. I'm just obviously giving up hypotheticals. And the GPCP is intended to solve that, which is essentially a capital accelerant to fund games, and either through investment, other structures where you don't have to be like a quid pro quo of, okay, you build the game here and you get money, but we can actually economically align in a sustainable way. So they started with like a very, I think it's a really healthy pool of capital of a couple of 100 million tokens. I hope it does really well, and I hope the DAO explores doing this in other verticals, right? I think that power given to the DAO is truly unique, and it's really important for the gaming ecosystem to be able to survive.
Teller is a decentralized protocol that enables anyone to borrow or lend using any Ethereum asset. You can think of a Teller loan as a DeFi cash advance, one where you can use any of your favorite ERC20 tokens as collateral to get an instant USDC loan. Discover the power of a DeFi cash advance today at Teller.org.
At Moonbeam, we're building a world where the wonders of decentralized technology are accessible to everyone. We're advancing Web3 integration through product enhancements, funding for innovation, and investment in our partner ecosystem. Our product roadmap includes ZK initiatives, tokenomics updates, and 8x throughput. Our $10 million innovation fund invests in startups that deliver cutting-edge solutions for RWAs and Web3 gaming, and our partner ecosystem continues to grow through grants and incentives. Moonbeams is delivering frictionless user and builder experiences to create the future of the internet on-chain. Join us by participating in the Moonrise campaign today.
I think it's really popular nowadays to shit on Web3 gaming and say that, it's never going to happen. It was like a VC shill. Given that you're at the forefront of seeing all of these games, or games that will benefit by building on Arbitrum, what's your take? What are you excited for among those Web3 games? Like maybe if you were going to convince me that Web3 gaming will happen, versus saying that it never will happen, how do you frame that up?
It's a great question. I'm excited. Like I said before, I think Web3 gaming is a critical vertical, and it's going to succeed over time. I think that we did a lot of damage in 2020, 2021 on actually really kind of claiming that gaming was just DeFi farming. You know what I mean? And it hurt. Like a lot of the major game studios saw that, and they just didn't want to be attached to that because of the negative externalities of their existing user bases or whatever. What I get excited about gaming is the teams that are building products that are supposed to be fun, understand the culture and the value propositions of the blockchain technology, and they're incorporating that. And with the VCs, like a lot of these valuations were probably tied to token exits or something. And that, I think, again, is the wrong mental model for what we should be building. We should be supporting gaming developers who have experience building games and are incorporating these Web3 properties in a way that is going to enhance the experience of the user. So, for example, proof of play, Ahmed is ex-Zynga, was, responsible for the building of Farmville. He's building Pirate Nation now. The game's doing incredibly well. They've got a ton of users. I think, tens of thousands of daily active users, are playing the game. The Beacon just had this launch on Arbitrum. I'm not sure if they're building from the Treasury DAO ecosystem. People are just having fun. And it doesn't mean you don't have to have crypto native properties. I think that the people who just ignore that are wrong too. But these aren't just sort of farms that are, going to have, cute JPEGs attached to them. They're intended to be fun games that can allow people to relax. And that's what I'm excited about. And that's what we're trying to build. I think that a lot of the AAA stuff maybe is a little bit early. The indie stuff seems to be performing better, I would say, in these verticals. And I think it's about expectations, level setting, and understanding what you're bringing in. But, we work closely with the treasury ecosystem, which Beacon's building, Pirate Nation, the Psy, for example, they're building Final Form out of the X-Populous studio that's associated with them. And my vision generally, whether this is across DeFi, RWA's gaming, is I like to build alongside people who are building things that are intended to last. And I think one of the biggest discrepancies you see in crypto is really about time preferences. There are some people who are building really cool things and then even they don't believe they're intended to last. And that's okay. There's a lot of fun viral things that are not intended to last, but everything kind of gets lumped in together. I think gaming as a vertical needs to be kind of built with the intention that, even if it doesn't last decades, most games don't last decades, it's intended to last to a period of economic sustainability, right? And that's what excites me. And those are the type of builders I like to build alongside.
AJ, how do you think through something like economic sustainability? Just thinking about the situation the DAO's in now and maybe forward thinking if we're going to go into a bear market at some point, and thinking of things like treasury diversification. I've also seen this new proposal come up for ARB staking. I know there's probably certain things you can't talk about there, but what can you say just about your view of that in general?
Yeah, I think it's a really great question. Obviously, I don't represent the Arbitrum DAO in any way. I work at Offchain Labs, which is, core contributor to the community. The main thing that I would say is I think that the Arbitrum DAO is much further along than any other governance-based systems in thinking about these things. And we talked about the GCP earlier. The GCP is fundamentally an attempt to recalibrate how DAOs should be thinking about economic sustainability. This trade of, use our block space for in consideration for grants just doesn't ever lead to sustainability or likely lead to sustainability. But it doesn't mean you can't be using your capital to invest and either get token allocations given to the Arbitrum DAO in these projects, get revenue share, whatever the structures are. We spoke a little bit about the step, which is the treasury diversification. The Arbitrum DAO is going to be holding around $35 million worth of treasury-backed, yield-bearing assets, right? And that's going to be yielding to the Arbitrum DAO additional yield that they can incorporate, right? On top of that, again, this is all publicly on chain. You can see the Arbitrum DAO is the only L2 that the sequencer or the chain profits go directly into the DAO controlled wallets. So, if you look on chain right now, there's about 15,750 ETH, about $55 million worth of ETH that the DAO controls. The token holders control can only be removed from the DAO control through voting. And that's assets that belongs to the DAO, doesn't belong to the Arbitrum Foundation, doesn't belong to Offchain Labs. And they're building up all of these, different revenue sources to basically have a lot more redundancy within different capital sources for the Arbitrum ecosystem. Time Boost is another example, should the Arbitrum DAO choose to adopt it, where they can potentially see, additional value generation for the foundation, for the DAO there. And I think these are really important questions. These questions are definitely things that the DAO is thinking about. If you look at how sort of contentious and debated the GCP proposal was, you can see that there's a lot of stakeholders who are really passionate about this question. And I think that the transition of this question being something happening within foundations to something that's happening in public, transparently amongst the Arbitrum DAO is a 0-to-1 breakthrough in corporate governance on DAOs, in agency, principal agency theory. I studied economics, and this is stuff I really care about. And it's really important. And there's enough different actors who care about different things in the Arbitrum ecosystem to make sure that they don't stray too much from having that mandate to make sure that it's sustainable. One of the 5 pillars of the Arbitrum Constitution is sustainability, and it is a priority. So I think this is really cool. I think this is really important. I think the DAO has done a lot of work on this to make sure that they are going to be future-proof that way.
AJ, one thing to close us out, when folks go to L2beat.com, which is like a great place to catch up on like key metrics and information around L2s, including Arbitrum, one of the things that always stands out for me is there's a column that says stage, and Arbitrum is labeled as stage 1. Can you try to like dumb that down for folks? Like basically like what's the meaning of this? And I guess what, if you could again, like try to keep this really high level, but what is going to propel Arbitrum to stage 2?
Yeah, so a lot of this stuff is built between frameworks that Vitalik and the L2B team have developed together. And a lot of it's minutia, and I won't do justice to the L2B descriptions for how to get to stage 2 or what's necessary. But fundamentally, the way you should think about them is like, is it a centralized system? Is there training wheels? And is it something that you should feel confident is 100% fully decentralized, sort of within the framework? Arbitrum's been in its stage 1 role since the date of a token launch. That was something that was really important, was that when we handed control to the token holders, that there was that sort of modicum of decentralization. So it's been about 1.5 years at this point. And we're going to continue to get the software and the technology in a position where, should the DAO choose to adopt certain upgrades, that we're going to continue to evolve. Everybody's goal is to always remain as secure and decentralized as possible. One of the tensions here, and this is why it's important to understand why training wheels are important, is if there's a vulnerability in an L1, what they do is they fork, right? We've seen this with the DAO hack, for example, or we've seen this on other L1s historically. L2s cannot fork unless the L1 forks for it. So if there was a vulnerability on Arbitrum, the only way to fork Arbitrum would be if Ethereum forked. And I don't think Ethereum's in a position where they're forking for any L2. So how do you protect against that is contract upgradability. But contract upgradability is a double-edged sword. If you can upgrade the contracts in order to protect against vulnerabilities, you can also upgrade the contracts maliciously, right? So having that balance of where you have confidence that a vulnerability is less likely to occur, or you don't have the ability to do it maliciously, is what everybody is trying to solve for. And we've got things like time locks on upgrades with security council overrides, the ability to remove security councils. There's all this complexity built into that. But that is the fundamental reason why people are not just saying, okay, we're going to go right to stage 2, and why that process is really so critical is because you don't have the ability to have a consensus to fork an L2 like you might an L1.
AJ, I think this is a great place for us to start to wrap up. So I want to remind our listeners that they can learn more about Arbitrum by going to Arbitrum.io. They should follow the handle Arbitrum on Twitter, follow Offchain Labs, follow AJ Warner 90. All of that's in our show notes, so you can easily reference it. And then, AJ, just again, thank you for coming on with us. We asked you a lot of hard questions. I want to close out with a more simple one. What's one application on Arbitrum that you might recommend getting started with? Just learning about, not financial advice, but any DeFi apps or Web3 apps that you're specifically excited about, and or any other sort of recommended steps for just getting started with Arbitrum.
Well, yeah, I think, it really depends. Like, Arbitrum's ecosystem is so varied. I always tell people who are new to the industry, try a swap. I think your users are probably past that stage already, generally, if they're listening to the show. But, bridge to Arbitrum, bridge.arbitrum.io, onboard through Coinbase, Binance, or whatever your preferred centralized exchange is. And then we have like portal.arbitrum.io, which shows all of the different like apps that are built within the Arbitrum ecosystem that you can try out. There's, swaps, Uniswap, Camelot, that's the Arbitrum native DEX, Trader Joe, like all these different, AMMs exist on Arbitrum, but I always tell people, try to stop, open some leverage if it works in your jurisdiction. That's my preferences on DeFi. And then, there's a lot of really cool things happening, obviously, in gaming. We discussed a lot. On-chain art is super fun. Prohibition with art blocks does some really cool things with Heart and Craft, with Jordan's project. So it really, I would say, go to portal.arbitrum.io, see what kind of things excite you, whether it's social, whether it's DeFi, whether it's just payments, and just play around. And I think you'll be amazed by the experience, the speed, the costs, and have fun with it.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.